This is the mortgage housing update as of April 14, 2026, and let's go through the rates. So according to Freddie Mac, we're still hovering around 6.46 as of last week for your 30-year conforming conventional loans, and Mortgage News Daily, very similar to that, 6.39. So from yesterday until today, we did not see any change, but we'll see how that goes throughout the day. And for FHA, we're hovering around 5.92 there. So if you have been waiting for last 3 months, you can see that in the last 3 months, we were hovering around before the war, around 6.2 and 6.3. After the war, it went above 6.5, and now finally things are calming down and hopefully the rates keep coming down. One negative thing that we see here is your inflation rate, right? Inflation data came out last week and we see that inflation went up to 3.3. So if you don't know much about mortgages, just by looking at this chart here, you can see that we were hovering around 2.4, 2.4, and all of a sudden we went from 2.4 to 3.3. What does that mean if you're thinking about buying a house? That means there's a less chance of Fed cutting any rates on the next meeting, which is the next 13 days, just because of this data, right? This data, they want this to go down towards 2%, not go close to 4%, okay? Just because of this, we're gonna see not any rate cuts in the next meeting. And we can see that your price growth means that typical home buyer has accumulated $128,000 in housing wealth over past 6 years. So people who bought it around COVID time or before that, they are, building equity around $21,000 each year. So if you have been waiting for a few years, you can see how much you have missed out on, right? And spring purchase activity jumps despite your climbing rates here. We see that, right? That rates are increasing, but if you want to buy a house, you're making your moves, right? Otherwise, you're just waiting and not gaining anything. You're keep paying your rent. And we have your scenario here. Let's say a family that's making $80,000, one person, and the second person is making $40,000, right? And they have a car payment, and the car payment is $500, and they have around $10,000 to $15,000 in credit card debt, but we're looking at their minimum payments. So within those 3 or 4 credit cards, they have to make $400 minimum payments on those cards, right? The down payment, they have around $75,000, and we'll use today's rates here, and $7,000 in property taxes and $1,500 in property insurance for the year. And this family can afford to purchase around $553,000 house, and their mortgage with principal, interest, insurance, and their PMI is going to be around $4,000 there. Now let's say they get rid of this car payment, and now they can afford $626,000. So you can see how big of a jump that was when you have a car payment versus when you don't, right? So all these scenarios matter when you're looking to buy a property. If you have any questions, please get in touch.